Okay, hi all. So in this video we're going to go through the 2002 club account part B, and it's show the income and expenditure account for the year ended 31st of the 12th 2001. So I have the heading over here, income and expenditure account for the year ended 31st of the 12th 2001. And essentially an income and expenditure account is just a record of all the income, the money coming in during the year, and all the expenditure, the money being paid out during the year. And the difference between the two of them is going to be, because it's a club account, it's not going to be a net profit. It's going to be either a surplus income over expenditure if you had more income than expenditure, or a surplus or excess expenditure over income if you have more expenditure than you had income. So that would be akin to a loss in a profit-making company or a for-profit company. So the one thing I'll say about this, similar to all income and expenditure accounts and profit and loss accounts, is that the figures for income, the money coming in during the year, isn't the amount that you actually received, or at least not necessarily the amount that you received. It could well work out that way, but it's supposed to be the amount that you ought to be receiving in income, and the amount that the expenditure is the amount that you ought to be paying for your bills for the year, not necessarily what you did pay out during the year, because you may be paying out extra, like stuff that you owed for last year, or you may end up paying out less. You don't pay out the full amount of a bill you got during the year, but we include in this account the amount that you should be paying for the period of the account, which in this case is the year, which ended on the 31st of the 12th 2001. So without further ado, income here. And our first piece of income comes from a bar trading account, which we have to do separately, and that'll be in a separate video. But we just take the last line from the bar trading account, which is your bar profit. And as I say, we'll show that in a different video. And that figure is 32,460. So 32,460. And that figure is all discussed in the other video anyway. After that, then, really to indicate what kind of income that should be in here, we should be looking at the different items in the receipts and payments, in particular the receipts for the income, the payments for the expenditure. So the first part of the receipts and payments we've already seen is the amount in the bank at the start of the year. So that's not income coming in, that's a fixed asset at the start of the year, money in the bank that you already have. Investment income, that is a piece of income. There's a little bit of work to be done to calculate the investment income figure. So first of all, it's 1,500 here is what you actually did receive. But what you need to come up with is the amount that you should be receiving. And there's a number of ways of doing it. You can jump straight in by getting 8% of 25,000. That's the amount of investment income that you should be receiving from these investments that cost 25,000. Alternatively, though, you can do it with, or show, I suppose, other workings where you receive this 1,500. You have this investment interest due from the previous year of 500, which you assume was paid this year and is included in that figure, but you do not want to be included in your accounts for this year because it was for last year and you only want the income for this year. So minus that 500, and it doesn't show down here, or it doesn't tell you in this particular question what the investment income still owing at the end of the year was. If it did, you would add it on here and you'd have your total investment income for this year. So in this case, you'd have to get that figure by getting 8% of the 25,000, which is 2,000. This is already at 1,000. You know the extra investment income that you're still owed at the end of the year, which makes up the total amount that you should have been getting for this year, is that 1,000, and the total amount you should be getting is this 2,000. Okay. The next part then is we're looking down entrance fees. That's fairly straightforward. No adjustment to be done there. And that figure was 16,000. After that, catering receipts. Now, there's catering receipts of this amount, and then there are catering costs of this. Your income and expenditure account would work fine if you put in the catering receipts in the income part and the catering costs here in the expenditure part. But the way that the State Exams Commission likes it to be shown is one figure for catering profit, where you put in the receipts amount here minus the costs and then put the profit in here. Okay, so receipts 5,250, the costs, catering costs 2,480, and then your catering profit then is 2,770. And of course, if the amount that you paid out was greater than the amount that you got in from catering, then it would be a catering loss, and that would go in under the expenditure or the expenses for the year instead of in with the income. So the next item to look at here is, where were we, catering, annual sponsorship, 36,000. I'm just going to call that sponsorship. 36,000. Subscriptions 96,900, so there's definitely a bit of work to be done there. So 96,600 rather is the amount that you received during the year, and according to this it says you received them for subscriptions, but that's not entirely true. So first of all, this figure here is, well, up here on top we have subscriptions prepaid of 600. So this is money was paid last year for this year. So it's not included in the money we took in this year because we were paid last year. But it should be included in your accounts for this year because it was for this year even though it was paid last year. That's the first thing. Then we go down here and we see part 5 said subscriptions include 2 life memberships of 4,000 each. Well, they're not subscriptions, they're life memberships, so we don't want them included in it. So minus 4,000 each is 8,000 in total. It also says subscriptions include subscriptions for 2002, which is next year because this is the year that ends 31st of 12/01. So it includes stuff for next year, so we don't want it in this year's amounts, and that's 1,500, so we minus that 1,500 as well. Furthermore, it says subscriptions include levy. Well, a levy is not a subscription, so we don't want it in with our subscriptions. It's for 2001 of €100 on 200 members, multiply 100 by 200 and we get 20,000. So that shouldn't be in with the subscriptions either. Simple as that. It's not subscriptions, it's a levy. And finally, subscriptions include a levy for 2000. Again, doesn't matter what year it's for, it's a levy. We don't want it in with our subscriptions. So €100 by 12 members is €1,200, so we don't want that in there either. So when we total all of that up there, we get a figure of 66,500. And we're nearly there. As we're looking down through the receipts and payments, after the subscriptions, we have bar receipts. Now, the bar receipts are, as we mentioned in the video about the bar profit, they do not go in because that figure has already been used in calculating this bar profit. So we don't want to put it in again, because if we put it in again, it means that we've put it in twice. I guess we've included the figure twice and we'll be overstating our profit essentially. So after that, that's everything in the receipts. Then if we look down through here, we should have a scan through each of the points really to see if there's anything else to do with income. But if we did, we would find that the only other income item is this life membership that's to be written off over a 10-year period. Now there's a little bit of work to be done in calculating how much life membership is being written off, but I'm just going to put in life membership written off, and the figure is, well, if we look at our life membership at the start of the year, it was 24,000. So I'm going to write that down here, 24,000. And we know that another 2 life memberships were collected during the year, 4,000 each. So plus that 8,000 gives us 32,000 in total. That's what we've collected in life memberships. But according to this, the life memberships are to be written off over a 10-year period commencing this year. So if we are to write off 32,000 evenly over 10 years, it's going to be 32,000 divided by 10, which is 3,200 that we will write off each year. So that's our figure for this year that we're going to write off. And when we say write off, it means we're going to take some of that life membership and we're going to claim it as income for this year. And next year we'll take another 3,200 and we'll claim that as income for that year, and so on and so on. So totaling all of this up gives us a figure of 158,930, and then we're on to our expenditure. So the expenditure is all the money that we pay out or ought to be paying out. Okay, so the expenditure, mostly we will look at the payment side of our receipts and payments and see if we can get it from there. Bar purchases, as we've said before, anything to do with the bar can now be ignored because it's included in the bar profit figure that we already calculated. Sundry expenses is our first one. So sundry expenses, and we'll have a little working to do there. That's 83,620. Now, the reason we have some work to do there is because at the start of the year we had this wages due 900. So we owed our employees 900 at the start of the year. Now we assume that during this year we paid out that 900 to our employees. We couldn't keep them waiting for more than a year for their wages. So we assume it was paid out during this year sometime. Now, since there's no wages payment showing in here, we know that the wages expense must be included in this sundry expenses. And by sundry, we just mean various expenses, like they've bunched a whole lot of expenses together, like maybe wages and electricity and gas and that type of thing, and they've called it sundry expenses. So if the wages are included in here, that means included in this figure is the 900 that we paid out for that wages that we owed at the start of the year. But those wages, if we owed them at the start of the year, it must have been for work that was done last year. So we don't want it included in this year's accounts. So what we want to do is minus 900 from that, and then we get a figure of 82,720. Okay. Next one, catering costs. We already took that into account when we worked out the catering profit, so we're not going to use it again. Equipment, we are not going to put that in because we never treat the purchase of a fixed asset as an expense. Coaching lessons, certainly we can put that in there. Coaching, I'm just going to call it, how much was it? 4,650. Okay. The next item down here is the repayment of the loan. Well, again, we don't ever treat the repayment of the loan or loan installments as an expense. However, the interest payments on a loan we do treat as an expense. So, loan interest. Okay, so just like the we discussed in the video about the accumulated fund, this whole 1.25 years interest, which is 13,500 minus the loan of 12,000, which is 1,500, that 1,500 euros in interest is not all for this year. Some of it is interest that was owed from the previous year. So a few months from last year that we still hadn't paid until the end of this year, and then we paid the whole lot, a year and a quarter's interest together at the end of this year. So it's only the year for this year that we want to include in this year's accounts. So very quickly again, even though we did this with the accumulated fund, 1,500 was the interest in total for the year. That's 15 months. A year and a quarter is 15 months. So if I divide it by 15, I get 100 euros. So 100 euros is for a month, for 1 month. Now, if we want the interest for an entire year, because we repaid the loan on 31st of the 12th, 2001, then we need 100 multiplied by 12. Okay, and that's the interest amount that goes in here. 100. And then after that, what have we? Transfer to building society 45,000. We don't include that either, because that just means that they took 45,000 euros out of their current account, out of their bank account, and they put it in the building society as an investment. So that isn't paying an expense. That's the purchase of an investment, which is, again, never treated as an expense. So lastly, we might have a quick look down through this to see if there are any expenses we missed. And we see in part 2 here, it says equipment owned at the end of the year is to be depreciated at 20% of cost. Well, annual depreciation of a fixed asset is an expense. So what equipment was owned at the end of the year? Well, if we look first of all up here, there was equipment of 11,200 at the start of the year. Then we check here to see if we sold any equipment. We didn't. We check over here to see if we bought any equipment. We did, 12,500. So 12,500 plus 11,200 is 23,700. So if I do my workings here, again, 23,700. And the depreciation rate for equipment is 20%. So multiply by 0.2 to get 20% is how I do it anyway. And that gives us 4,740. So that is equipment depreciation, or depreciation on equipment. Depreciation. Okay, next thing here is clubhouse and courts are to be depreciated by 2%. Well, again, from the start of the year, our clubhouse and courts were 520,000, and without writing it down, 2% of 520,000 is 10,400. So 10,400. I'm going to clubhouse and courts C&C depreciation for 10,400 rather. And then that's almost it, I would say. Nothing else down along here. Let's see, debtors and creditors, we already dealt with that. That's income, so we're done. Okay, so totting up all of that comes to 103,103,710. Again, I'm going to use brackets to show that I'm subtracting that figure from the figure up here. And when I subtract the 2, I get a figure of 55,220. And if this were a for-profit business, it would be the net profit. But since it's a not-for-profit business, it's a club, we'll call it surplus. Since there is more income, surplus income, more income if you like, over expenditure. And that's it.